Well, I think last week has proven you got to be looking at this market half full, right? Because we've had attempts to really undermine and sort of weaken the bull narrative around equities, and it's been short term. And I think, look, fundamentals are great. We have a lot of breadth, right? Advanced declines, new highs, and then things like small caps rallying now are really bullish signs. So I think between now and year end, I think investors should be pretty optimistic, right? We've got a PE that's lower than it was at the start of the year. So,
Margie, I guess the question is, even if we do have a lot of tailwinds for the shorter term in a few months, where are we in the cycle as far as you can tell? You obviously have invested a long time across stocks and bonds. So what do we have to be looking for in terms of the durability of these trends?
I think we haven't ever seen a period like this. I don't see it as a cycle where we'll peak and then we'll go down and have a big market correction. I think we're on a steady ramp upward in continuing economic growth, higher equity levels, and I think interest rates will be very benign for the market and not really derail the economy, because we really haven't had this growth due to an explosion in leverage, which we've had in previous cycles.
Tom, to Dom's point, I mean, you can always find a bearish case, and that's been one of the hallmarks of this rally that is now going for a record period.
Yeah. The
wall of worry, the lack of conviction. The bears have always had their case. What are those that have called out the staying power of this rally got wrong? And how do we know when that turns?
I think we have to appreciate what the last 9 years looks like, right? Because we had come out of a financial crisis, and I think a lot of folks in '09 were writing about this, that we had established a bubble of pessimism. And I think even this year, it's been very popular for people to try to call the top, right? But as you know, no market top is ever really called. No one's ever called the top before the top. But what's interesting is I think there's a demographic argument too. I mean, we're seeing it. Millennials, the largest generation ever in history, median age is 26 and a half. They are just hitting their prime income years. We're seeing Robinhood and JP Morgan launch apps targeted this, but we are doing a lot of work on this. They're going to account for 72% of the growth in the purchases of financial services in the next 10 years. So the biggest reason we are in a bull market now is millennials are making a lot of money.
Margie, you say you think interest rates for now remain benign for stocks and presumably for the economy. Should we not be concerned about why interest rates might be kind of stuck at lower levels?
No, not at all. I think we have a Fed that is very transparent in what they're doing, and I think that takes a lot of the uncertainty premium out of interest rates. Inflation, after practically a decade of recovery, is still very well behaved, and we haven't had any excesses in lending in any sector. So that says to me, I'm not really looking for interest rates to go up a lot, even if growth stays at 2.5–3%, which is what I think we'll see in the U.S.